Hi everyone, and thanks for checking out my channel. I'm going to have a look at the market and still following the analysis I've been studied, a bit more global, looking at a couple of things. As that scenario, which is directed to the downside, is getting some validation somehow, but the market is still quite resilient, we are going to see. And there's many things pointing to that scenario being pretty much a 50-50 probability at that point, so not really highly confident that it will actually continue the way I think it will, or not in the short term at least. So let's get started with the S&P 500. So as we can see, we've been moving inside that very big rising channel, rising wedge, sorry, from here. So either way, there's two scenarios if we come to break it down. I mean, for now, there's no indication we will. That lower end has been acting as a major support once again last week on the 50 MA on the daily. Strong move back on 3,860, and then we closed almost high, all-time high. That could be double top, but the close was quite powerful on Friday, so I wouldn't really bet too much on the reversal from that point, but we will see what will be the start for tomorrow. So two scenarios here: either we come with the shortened version of the rising wedge with that break that would take us basically to the target I had before, 3,500, and of course we're having the very big and pessimistic scenario when we actually take the entire length of that drop and report it here. So that would be a drop down to 3,000. Honestly, at that point, I think it's an extremely low probability. I don't see what could be the trigger for something like this. It would be something very big, and just right now, except if we enter some sort of a bear market because of higher rates or something like this, or the economy struggling because of the global debt. It's a possibility, but the sharp drop, of course, I don't believe that will happen, but we could still end lower in the coming years should we actually start reversing, but this is still not the case. We're having that divergence that's definitely capping the move to the upside. That's the reason of the higher limit that's actually making higher highs, but very narrow. But for now we are still in a uptrend, so very tempting to short, but on the other hand as well, there's still some potential to move to the upside above 4,000, and the break is of course not confirmed. So the more safest option could be to enter on the breakdown, or of course the risk of getting caught on a false breakdown, which is why usually I'm tempting more to position myself on tops, getting the signal with the trend line here, and at least I escape the trade if it does actually break higher instead of getting caught with a lower or too low price. So we'll see that. Looking at the treasury bonds, also some sign that we are reversing on that market. We're having a bullish divergence on the daily, on the key resistance just at 155, but potentially it's quite limited. We could see 160, but the only thing that's a little bit annoying here is that on that divergence, on the second test, we don't have a really convincing reversal pattern with a really strong buying power. We got some green candles, but it's been rejected strongly immediately thereafter, so we can still be at risk of getting for another push to the downside here that could easily take 150 or go lower, keeping in mind that the all-time support trend line is running now at 140, so it's really getting close now of some sort of very strong technical limit that will definitely cap and prevent the treasury bonds to drop much lower. So if we look at the US dollar, it's been quite neutral. I think I'm actually load that chart to that now. Just right here. So it's been breaking down that bearish flag we had, as we can see here from the top there, and the target, and it was the target originally around 1.415, sorry, with of course the 1.10. That's very much more pessimistic for the euro target, but for now there's no not really much reason to believe that we're going to break 115 right now in the near future before getting some bounce to the upside. So for now, continuing down, there's no sign that we are actually reversing. Here we are on the daily. We can see we're starting to form some divergence here, in red, but it's not validated here. We can see that we don't have a proper reversal signal here. So we'll need to see what will happen on Monday, Tuesday, and see if we can actually break higher than 1.19 potentially. That could invalidate that bearish flag scenario and make that move to the upside more realistic to 121. So keeping an eye on this definitely, but not extremely in favor of a strong continuation to the downside. We could still actually range bound inside that range. So yeah, let's see. About gold, it's been getting out of that falling wedge, getting that divergence did work quite nicely, reached the 1750 and then dropped back. So we're now having another divergence that's actually pushing the price down, and I believe we are very likely to see that break next week. As you can see, price is capped quite neat just here, and some sort of descending flag. So of course could still see that as some sort of flag, and on the break that would actually move to would be hard to actually break 1770, but this is a possibility, so definitely keep an eye on this. But I think continuation to the downside is probably more likely, given that we're having that very large bearish figure that's been validated. So potentially retesting it is not impossible, but very much risk to the downside at the moment for gold. If we look at the quote report, it's been relatively bullish from the managed money. They did actually keep adding long during that period, and we can see the price did actually move to the upside a little bit, but we can see also some increase on the short side, and the edgers did actually reduce short, so they're not expecting much higher price in the near future, not anymore at least. So yeah, not entirely bearish, not entirely bullish, quite neutral I would say, and not actually pointing to any strength or potential break to the upside for now. So we could still be seeing some more range bound trading from here, potentially retesting below 1700, but potentially not seeing any major move in the near future. So if you look at Bitcoin, I've been making a point that I think we made a top at just above 60k, and that we are correcting now. So it doesn't actually look that obvious because the pullbacks are really strong on Bitcoin, and it does look, of course, extremely bullish still yet. But we can see that we're having divergence on multiple time frames that are quite solid. We did also break that waterline at 54, but did actually bounce on the 50 MA. To now retest that trend line just slightly above 55. So as we look here on the momentum, it's been quite powerful on that drop. We can see a hidden divergence here with basically a higher low, but we can see that the RSI did actually push under the previous level here when we dropped back to 45. So these are quite far away one from the other, but still it does actually show that that move we got from 57 and the break down we got at 54 was really powerful to actually push the RSI to with such a strong momentum. So we'll definitely be keeping an eye on Bitcoin. I'm not a buyer, except if I get some solid signal, for example at 45, to play a trade to the upside, some sort of a pullback. But I think we are going to see much lower price on Bitcoin in the coming weeks. With my first target, which is less pessimistic, sorry, somewhere at 30k. Potentially with that trend line we could not drop below 32, 33, but the more pessimistic, and that one is on the weekly chart, is still 20k. A big reason I would actually like to see 20k retested. I don't actually hope that for the people that are long on Bitcoin because of the serious correction, but is that we never actually retested that 20k level, and I think for proper continuation to the upside we need to retest and establish that level as a strong floor for this market to continue moving to the upside. A bit similar to what we got before on the previous move to the upside, as we can see. We had that resistance, it was 7,600. We did actually break to the upside up to 20k, and it did actually recorrect down until it did actually retest the same level, the 7,000. It did actually stay below that level for quite some times. Did actually break to the lower end, almost 3,000. So of course I'm not seeing that kind of level back again, and even any move below 20k are very likely to be bought very quickly. So the range at that point will be likely 15 to 20k, similar to this potential dip a bit lower, but not much lower. So of course far away from that from now. We're still looking very much bullish until we did actually establish the first lower low would be the first one. So breaking down 45 would be a strong bearish signal, but we could have here at 58 potentially a lower high. That could be a first confirmation of the reversal. So let's watch that trend line. Another rejection at 57, 58, and a drop continuation to 45 could be a nice buy opportunity to trade some pullback. And finally, looking at crude oil. Crude oil has been dropping sharply, but also bouncing really aggressively on the back of some tension we're having on that market. But the sell-off has been very strong since we did actually break 64, and now we did establish some 4 hours divergence here. That's been partially cleared by that move to the upside at 61, but now that level will be under close watch, because either we actually break that higher and then we are clearing the figure up to 64, or we are continuing to the downside, potentially not able to reach 55 without even invalidating that trend line, the divergence. So very key next week. I have no position on oil at the moment because I think it's too risky. Could definitely go to the upside. I'll be interested in shorting 64 because that's a very good level, and of course the buy level is 54, 55. That'll be a good good level to watch for long entries. So yeah, just looking quickly on oil on the quote reports, as we can see, we got a massive drop of open interest. I think we caught the big fall on the 64 breakdown, so it's not entirely surprising. If we look actually, management did actually reduce their long position strongly, but didn't actually increase much of their short, so they're not maybe anticipating continuation for that. As we can see, some traders did actually buy during that move. Liquidation, of course, of long position, but also short. That's been a bit surprising. And the swap dealers, they are continuing to actually hedge against lower price, which is definitely bearish. So I'm not sure about oil just right now. It's a bit difficult to trade in that area and probably too risky. The risk-reward ratio is too low, in my opinion. So I'll be waiting for a drop here, or potentially a move to the upside, 64, drop to the 54, 55. Should we actually confirm the break to the downside, that could actually be interested to enter a short position with a tight SL stop loss about at 62, but again, risky trade, so be careful trading that one. So yeah, that's all. That's about it for tonight. Thanks for watching. Wish you safe trading, and I speak to you soon. Cheers, bye.